The jobs market data just came out, but it is not telling the whole picture. The market rallied on this news, even though there is underlying cracks within the data. Now, I am just uncovering these secrets for you guys one day at a time. But let's first dive into the overall market and what everybody is saying about the jobs data. Well, the stock market jumped up today as the Trump calls on the Fed to slash rates and the jobs report comes out. So the unemployment rate still held steady at 4.2%. The total number of jobs in March and April was revised down by 95,000 roles. Now, that was down from a revised. So the economy added, 139,000 jobs last month. The new data showed that was down from 147,000 the month before, but beat the consensus expectations. So this is the crazy thing, is everybody's anticipating the jobs market and the jobs data to be less, right? They're anticipating it to go down. Well, hey, it beat the expectations of how much we thought it's going to go down. So the market shoots up like absolute bananas. Let's keep diving in a little bit here into the data. Now, the non-farm payrolls are following other indicators suggesting that job creation may be slowing against the backdrop of trade policy uncertainty. Now, there is a lot of craziness in the market, and it's not just the jobs market. We have Trump and Elon fighting at odds here publicly, where they're literally going at each other and saying, hey, look at what we're talking about. We're talking about the U.S. debt and the potential of Trump adding more to this. And look at it. I mean, we have $36 trillion. We'll have $37 trillion here in the near future, unfortunately, of debt. And it seems like there's no end in sight, honestly. Like there's not a way out of this that is anything clear. But the U.S. payrolls are increasing and unemployment is, not quite where it is, right? So it increased more than expected. So everybody's saying, oh, let's shoot up the jobs. Let's shoot up the jobs. But the reality of the situation is these jobs might not be really open, right? Employers added 139,000 jobs, though hiring slows. So these jobs are being added and everybody's like, oh, we'll take 5, 10, 20 weeks to freaking interview you and send you through the process so you can essentially look at what we're looking at, or we can essentially look and make sure that we're having the correct hire. But in reality, everybody's all happy and excited because the jobs market looks better than initially anticipated, which I think is the huge issue here. I think the huge issue is, hey, the overall jobs market and the data shows one thing, shows that there's more jobs growth. But the underlying issue is that people aren't hiring. So what's the point of having these jobs being on paper? There is none, right? The point of jobs is to hire and people and to keep the economy moving, keep spending going, and do the whole nine. Well, if we're not doing any of that, adding jobs does absolutely nothing. It's all for LinkedIn, ADP, all of these people. They could just add 1 million jobs. I could add jobs here today if I really wanted to. Am I open for hiring? Unfortunately, I'm not there yet. Maybe if you guys smoke the like and subscribe to the channel, we'll get there eventually. But regardless, we are seeing these numbers just being added like crazy. And the unemployment is still holding steady, which means that nobody's really hiring, right? For every firing, there's a replacement hiring, or people are just simply just not filing for unemployment. That was the initial thought before, is that when people got laid off or fired or whatever, they weren't filing for unemployment. And the U.S. payroll growth slowed modestly in May as employers added only 139,000 jobs amid Trump's sweeping import tariffs, federal government layoffs, and immigration crackdown. The unemployment rate is holding steady, and the job gains for March and April were revised down. So this is where we'll also start to see the manipulation of this data, is that we're going to get reported that, hey, the jobs data looks good right now. We're going to get a revision in a couple months that's going to show the jobs data just wasn't as good as people think. And that's essentially the unfortunate truth of what we see with governmental data, is that we get presented one thing, the market reacts and does pretty well, and then you really take a look under the hood and those jobs weren't real. It's going to get revised, and then the market is just going to be where it is because of falsified data. And that's essentially where we've been for quite some time. I mean, we've even had Trump say that, the governmental data is false and the governmental data is wrong. And everybody is saying that, hey, can we trust the jobs data from there? CNN is coming at Trump's neck saying, Trump routinely calling economic data fake. Here's why that's dangerous. I uncover why it's fake for you guys. I show you guys the differences in what they report and what we see, right? I mean, Govflation, Trump's no idiot. He was around in 1982. So he knows when you got 2.3%, we're still looking at, 2.3%. What are we looking at? 2.3%, we're still looking at over 10. I mean, 2.4 is at 10.21. I mean, so we're looking at these governmental data that they're putting out, and it's just insane, folks. But the unique situation that we're seeing here, and something that I've reported on before, is that the consumer confidence was at yearly lows. It was the lowest that we've seen in 4 years, which we all know what happened like 4 years ago, right? But the consumer confidence is starting to come back. Now, what is consumer confidence? Consumer confidence, if I lose my job, that I could get it back, or, I have enough money to be saving, inflation's going down, I can, live a happy and fruitful life with the salary that I'm earning currently. All of these things play into consumer confidence. So it's not just one underlying statistic. Consumer confidence is an overarching statistic that is trying to get a feel for the overall consumer. And so the state of Florida, UF, consumer sentiment rebounds for the first time since January, where it's saying Florida consumers are feeling better about their outlook of the economy, but there's still national concern about the tariffs. Look, I don't know about you guys. I'm in Florida. I don't hear anybody really talking about the tariffs, but that's just me. And then we've got Deloitte, one of the bigger firms out there, giving a report on the consumer. So it's down 6 points. The Deloitte's Financial Wellbeing Index saw its strongest monthly drop since 2023, and a month ago in April. Higher price expectations are holding the uptrend. 3 in 4 respondees expect higher grocery prices next month. Monthly spending intentions for non-discretionary categories and savings remain on a gradual long-term uptrend, while discretionary categories to continue to weaken. Rising year-on-year spending intentions for leisure and travel remain strong, despite respondents saying they're spending more on housing and groceries. And what does this all mean? Well, I thought something unique happened today. I literally check this with you guys every single day. So make sure you're smoking that like and hitting that subscribe button. So you guys join me with the bell notifications with this. So I'm not just yelling to nobody here. But the change that we saw here today was that there's a 0.1% chance that the Fed hikes at the next meeting. So there's a 99% chance the Fed is going to do absolutely nothing. But there is that 0.1 chance that the Fed is going to hike, even though we're starting to see some strength in the Dixie come back. And it's interesting we see the strength in the Dixie come back because we've seen the market absolutely take a tumble and then rebound today. Yesterday, we saw with Trump and Elon, their whole back and forth, the feud that they had going on, the market went down quickly. And then after that, we've seen the market start to recover today. Look, I don't even want to show you guys Tesla stock, but Trump is saying that he's going to sell off his Tesla. And Elon's going back and forth. It's a really public war that they're going out here. But it's interesting because they're looking at it and they're saying, hey, Tesla rebounds as it cooled down. It was just one day. It's just guys being dudes arguing a little bit over the internet. But it's interesting that we're seeing the rebound take place. But the reality, what's deeper underneath the hood, is that they're arguing over this. The U.S. national debt. Everybody sees it. You see it. I see it. We all know. And the jobs data can show one thing. The jobs data can show, hey, payrolls 139,000 in May, more than expected at 4.2%. But the reality is hiring is slowed down and we're not getting anywhere closer to where we should be. So the Fed needs to cut these interest rates in order, or maybe even hike to protect the dollar. But I think it's interesting that we're starting to see this here. The first day that the target Fed rate, less than a month away, is now potentially going to hike. If you guys enjoyed this, please smoke the like Cheech and Chong and hit the subscribe button. Tell a friend to tell a friend. Get the bell notifications on because I'm going live for you guys 5 days a week. At least I'm trying to. So go ahead and do that, and I will catch you guys all at the next one.